guys finding any difficulty creating the trading plan at all?
For me,
mine.
it was to complete my checklist. So I know that I have to put the 5 and the 13 cross. Then, but my main difficulty is when I have to find the divergence, so to put it in my checklist. So every time I put some divergence on a back testing, and it's end up by doing a losing trade, something like that. So
yeah. So I mean, think about it like this: the more stuff that you put in your checklist, right, or in your set of rules for entry, you know, the more confirmations that you want to have. Obviously, that's great because you want to have the best possible trade setups. At the same time that you're doing that, also just realize that a side effect to that is the fact that you're going to end up taking less trades, right? So don't get upset if you don't find a lot of trades based on the actual things that you're putting into your own plan. You know what I mean? So if you understand that, hey, I want all these things to be present before I take a trade, that's fantastic and that's great. And you should have very super accurate trades. But the offset of that is that you're going to have a lot less trades because of it. You know what I mean? Because you're just not taking everything that's there. So I think that a real thing that becomes very apparent is once you have your set of rules down on paper, your checklist, whatever you want to call it, and you start back testing that checklist, and you start to notice that, hey, you know, over a 6-month period of time, I'm only getting literally like 7-10 trades total with that checklist. Ask yourself, is this going to be, am I going to be okay with it, basically? Because you don't want to put yourself in a situation to where you're following that checklist, but at the same time you're not getting any trades that happen, you know, very often because of it. And so you start to get very impatient, and then you start to break the rules that you put for yourself. Does that make sense?
Yeah. Okay.
One thing I'm finding, Mark, is I did my trading plan, and then particularly with GJ, I was noticing particular patterns and things that I'm going to have to go back and modify. And I think you said on the other night that you are going to see particular nuances to particular pairs, and I'm starting to see that.
Yeah, you're definitely going to see just different things appear, you know, from the back testing. And so those are the things that, you know, normal retail traders wouldn't know because they don't go back to back test. But you're going to start to notice certain behaviors that pair does all the time.
Yeah.
And so that's why, you know, you have people that just trade one pair and they're really comfortable trading that pair because they see the same shit over and over and over and again. I mean, so, you know, they feel very confident or very comfortable, you know, trading that one pair, whatever pair that is that they choose to do.
Yeah.
But yeah, so very important that if you're doing the checklist, the more stuff you put on it, obviously the side effect is you're going to take less trades. So as you guys are building out the plan, make sure the most important things to have on the plan, the things that you want to make sure that the trading plan has to have, or the checklist has to have, it's got to have your entry rules. And this is basically the same thing as your entry triggers. So meaning like, what are the things that need to be in place for you to actually pull the trigger and get into the trade? Okay, whether that be the 5 and 13 crossover, whether you're waiting for just the close of the 13 and a pullback afterwards, or whether you're waiting for the 5 and 13 cross, then a pullback before that or after that. Whether you want to have the confirmation of the TDI along with it as well. Whether you want to focus more on, let's say, having setups that have pins to the EMAs, pins to the 50, 200, whatever the case may be. So all those things, start thinking about all those things that you want to have. And of course, like I just said, the more stuff that you have, the more stuff, the less trades you're going to have because of the more confirmations that you're going to have in it. So the next thing you got to have is an exit strategy, right? You got to have an exit strategy in place for you to get out of the trade. So I think the exit strategy should be pretty simple. The more simpler, the better, because it makes it very black and white. So you don't want to have like a maybe this, maybe that, because then you start thinking too much. And we all know what happens when you start thinking too much, right? So think about exit strategy can be as simple as if you have the EMAs in your favor, just use the EMAs as your take profits. If you don't have the EMAs in your favor, then think about what other things could you use in your favor to actually say, hey, I'm going to take this as take profit. So you could have, let's say, something as easy as just plain old 30 pips. You can have or use something as simple as, let's say, previous week's lows, previous week's highs, previous days lows, previous days highs. You can use as, things like if price is, very high and it's coming down to, like, let's say the top of the Asian range, the bottom of the Asian range, the middle of the Asian range. So all these things you can use as exit strategies, as exit points, essentially, if you don't have the EMAs in your favor. So if you don't have the EMAs in your favor, use something like that that's significant of a pivot, what I like to call like pivot points or whatever. So those are basically those lines that are on the actual indicator. So whether it be the yesterday's low high, last week's low high, or the top of the Asian range, lower the Asian range, whatever the case may be, those are all things you can use as an exit strategy. And then also you got to think about as well is, are you going to be putting yourself in a situation where, let's say you get something like where you have your Asian range here and you have price that's doing this, right? You got to type, let's say 1 here. And then instead of coming straight down, right, it doesn't do that. Let's say it does this instead, or it does this, and it starts to do that. What's going to be basically your strategy when you have that kind of scenario? Because that scenario is probably going to happen to you. So what do you think are some things that you can put in place when you have that kind of scenario happen? 6 candle. Okay. So what happens, let's say 6 candles, you get out of the trade, and then on the 7th candle, it does this. You live with it, right? Come back tomorrow. Yeah. So those things are going to happen to you at some point, So that's why I bring it up, because it will happen eventually. Like literally, as soon as you get out, maybe the 7th candle is the one that like drops or something like that. I think that a lot of it would have to do in the context of like, what time is it? You know what I mean? So think about if this portion right here is happening between 7 and 8 a.m. Eastern Standard Time. That's typically like an hour of like literally dead space. You know what I mean? For the most part. Yeah, it can if you let it. Absolutely. Yeah. So think about the timing aspect of it. if this is going sideways here between 7 and 8, you know what I mean? Maybe exit, right? Exit that 6 candle rule and then see what happens at the beginning of the New York session, whether they come back up a little bit and then drop it. You know what I mean? Also, another thing that you could do as well is if you have that type of situation is you could go ahead and let's say if this does come down like this, and let's say this is, here's the box. Let's say that's the London box. And then here's the New York box, right? That's just starting here. Here's the extended out. So let's say that if you're down here at the beginning of the US session and you're, you know, typically, I don't know, let's say 20, 25 pips away from the high, and obviously you're clearly pretty off the low of the day, depending on if you look back at structure, right, you could be actually getting a continuation trade, right, to continue this move that happened. So like this, you get what I'm saying? So if this doesn't move here, you get out, reanalyze it basically at the beginning of the New York session. So these are all things to keep in mind. And so again, the more stuff that you go back as you're back testing, just be aware of those kind of behaviors that the pairs that you're looking at do. And so another thing as well to keep in mind is as you're doing the back testing and you're back testing the strategy, your trading plan that you're going to trade, if you notice that, you know, let's say you're focusing in your trading plan on only taking type 1 setups or something like that. If the pair that you're back testing, you notice that it's not giving you like a lot of type 1s, then get rid of the pair and pick a different pair. You know what I mean? Because that particular pair is not going to help you if it's not producing what you actually want to do. You know, there's 28, 30, 40 other pairs that you can choose from. So don't feel like you have to stick with one particular pair because you think you like that pair. Doesn't matter if you like it or not. The question is, can it produce the setups that you're looking for? And if it can't produce the setups that you're looking for, that's going to be a problem because you can't trade something that it doesn't produce for you. You know? So whatever pair it is that you're back testing with your plan, make sure that if it's not producing any of those trade setups for you specifically that you want, then hell, you have to switch to a different pair and get one that actually does produce those kind of setups for you. Does that make sense? Don't be scared to switch the game up because you're going to have to make adjustments as you go. Just like if your trading plan, if you back tested, let's say, you know, from 2019 or whatever, and it doesn't produce a lot of wins for you and it produces a lot of losses, there's going to be an adjustment that you need to make. And you need to find out, okay, what's some common thread here of why I have all these losses in my back testing? Because clearly if you just follow what you wrote down on that plan, you're going to be consistent at something, either wins or losses, you know? And so the important thing is we got to find out if it's losses, okay, what's the common thread between all of the losses? Because if we can find one common thread that has those, you know, that's basically causing the losses, then we can get rid of those losses when we go back and retest it again. It's literally trial and error. That's all it is. Literally trial and error. Okay. And also keep in mind that when you're backtesting and stuff, you don't have to be up during London. You don't have to be up during the US session. You can do this at your own time. You don't have to change your schedule or anything to do this. You know what I mean? So you don't have to be up for London to backtest. You can do this stuff all offline on your own time without needing to, kind of mess up your schedule if you have a job or family or kids or whatever. You don't have to change that right now. The only time that you need to adjust that is when you're actually going to start, live trading. Then you need to, make whatever adjustments you need to make. But other than that, you can do all this stuff right now offline. So there's no need to feel like you have to be up, around that time or whatnot. All right, so we got the entry, the exit strategy. And then you guys need to be listening. You guys need to be listening to some kind of trading psychology. All right. You guys need to be listening to some kind of trading psychology, whether it be the videos on that I have on the website for you to listen to, or whether it's a book, whatever. The trading psychology part is going to be probably one of the hardest things that you're going to have to overcome. And if you haven't ran across it, I'm sure you're going to eventually when you trade a live account. So when you start trading a live account, right, I'd always tell you to start trading a small live account so you can get used to the psychological aspects that are going to happen to you when you're trading a live account. So take something as simple as like $100, $200, and put it into a live account and then trade that. And the whole purpose of that account is not really to make any money off of it, but to actually just help you with the adjustments that you're going to have to make in order to trade a live account. Because there will be adjustments that you need to make in order for you to trade that live account. And the psychological part that's going to come into play is going to play a huge factor for you. So there's going to be adjustments that you need to make yourself when you start trading. And so it's very important for you to just make them now, but make them on a small account. So if you make mistakes, you make them when you lose $3 and you don't lose $300 or $3,000. So make them on the small account that doesn't matter before you actually trade, your like your real account that may have whatever it is that you want. Does that make sense to everybody? So don't feel this whole pressure that you need to hurry up, and trade a live account. Listen, I think if you need money right now, then you need to look for a freaking job and not think that you're just going to do this overnight with trading. Because that's just not realistic. It really isn't. If you're worried about, let's say, not having enough money to have like a real big account or whatnot, then I think as long as you know how to trade, as long as you have a plan, you know how to risk manage or manage risk. You don't do like the typical stupid behaviors that retail traders do of revenge trading and being emotional, fear of missing out and all that stuff. As long as you don't have those attributes, you can go and you can get a funded account with a prop firm. That's totally possible. So even if you don't have, let's say, a lot of money to start off with, if you know how to trade, if you know how to manage risk, if you're not an emotional trader, if you have good trading psychology or good, control over the trading psychology that you're going to get, then that may be an option for you as well. And so if you can pass, their challenge or whatnots, then that's also an avenue that you might have available to you. But you definitely have to know what you're doing. Because, I mean, if you imagine if you're an investor and you have whatever $2 million or something, and you're allowing somebody else to trade for you, what do you want that to know that person knows what the hell they're doing, knows how to manage risk, knows that they're not emotional, they're not going to get emotional over a loss, knows that they're not going to revenge trade, they're not going to do the typical stuff that retail traders do. So it's totally possible for you to do that. And I mean, once you have that funded account, then I mean, by all means, you're pretty much all set. Now it's all up to you to just follow the plan and do what you do. So those things are all very important to keep in mind if you don't have a full on, whatever, 5,000 or 1,000, in the bank to actually do your live trading. As long as you know how to trade, there are definitely options for you to get funded as a trader, but you still have to know what you're doing. That aspect of it won't change. How many of you guys are still struggling with trading psychology? What are you finding most difficult about trading psychology? Seeing it and staring at too much. So are you talking about just in general staying in front of the charts too long, or you're sitting there like watching your trade, hesitating on the entry? Okay. So I guess what's really causing you to hesitate on the entry? Are you not really sure about what your entry rules are that you're going to have for yourself, or is there something else that's causing that?
No, it's not, look, I see a trade set up, and I tend to wait for one more candle, and it goes in the direction I want it to. I think, shit, I should go on in when I knew it was the right time to get in.
Okay. So I guess you're waiting you want like that extra confirmation.
Yeah.
Right? That's what you want. You want the extra confirmation.
Yeah.
Yeah.
But just through backtesting, I'm sure I'll convince myself of it.
Well, I think you're going to have to convince yourself of something, because if you keep doing that, then you're just going to end up missing, missing the trade and stuff.
Yeah.
You know what I mean? And so then that's obviously not going to, that's not going to do anything for you if you're too scared to take a trade. Or if you're waiting, too extra long for a confirmation and stuff. So I think that you definitely have to, don't be scared to pull the trigger. As long as you got your confirmations there, just pull the damn trigger on it.
Yeah.
Jalen, moving the stop loss. So, I mean, I think moving the stop loss is going to be something where you're going to have to kind of like either pick whether or not you're going to look at actually, are you going to move your stop loss, up to here at some point, or are you just going to leave it there and let this go to your take profit? You got to pick, what are you going to do? Because if you're like starting to, and this is what is probably going to happen a lot, is let's say you take an entry here. So you take an entry here, you see it go up, right? and let's say it's up to here, and then you move your stop loss up somewhere over here, and then it comes down, and because of the spread that's at the bottom of this candle here, it may take out your position, and it goes up for another freaking like 30, 20 pips or whatever, you know? So if that's something that you don't want to happen, then you're going to have to literally like leave your stuff there and, you know, kind of accept the fact of, you know, whether you're right or wrong, and let it, you know, take you out 25 pips or whatever, put your stop loss in, let's say, or take profit in like 25 pips up here, maybe 26 or something. I mean, you know, you gotta play around with it. But if you move your stop loss up to break even, obviously you got to know that, you know, you're going to take the risk of you moving your stop loss up is that when they come back to retrace, which primarily a lot of times they do retrace, it just doesn't go up, you know. It doesn't just go up, you know, blue for friggin' 8 hours or so. When you're right on the direction, think about this. When you're right on the direction, how long is from here to here or from here to here? How many hours is that? You know, if this box, let's say, is 4 hours, right? It's 4 hours. This started back here, probably like an hour and a half plus that. So we're really about 5 hours, and then you got another hour up here. So it's about 6 hours, right? When you're right about the low or the high of the day, it's slow and steady for 6 to 8 hours in one direction. So of course it's going to come back a little bit, then go up higher, come back, go up a little bit, come back. It's just slow and steady in one direction for 6 to 8 hours. You know, look at the trades that produce, you know, the actual pips. They go when you pick the right low and the right low or the high of the day. It's slow and steady for 6 to 8 hours. If it's, you know, if you get lucky and you get something with a huge movement or something like this, and you're getting, you know, let's say you're going for 30 pips, it might be over in, you know, in 3 candles for you, and that's fantastic. You know, when they move the market really fast like that. But a lot of the times it's just slow and steady. I think a lot of people move their stop losses way too fast to break even. And so when the pullback happens, that's when they get taken out, and they get taken out at break even, or 5 pips in profit or 10 pips in profit. And I think really it's just all because you're scared to lose. You know, you're literally scared to lose. A lot of times that's what I find, is that literally you're just scared to lose. And that goes just back to the psychology. Yeah, you're getting nervous from losses and letting setups go by. Yeah. Bad and boost. I think, Angel, that like I was saying earlier, the more picky you are, that's perfectly fine. If you want to be more picky, that's perfectly fine. You can do that. But just, you know, the flip side of that is obviously that you're going to have less trade setups. So I guess as long as you're okay with that, then you're fine. Or let's say that you want to focus in on a certain, you know, pattern. Let's say, you know, I don't know, let's say like like you're only interested in trading off of, you know, peak formation highs or lows at level 1 or something like that. You know, you're not always every day going to have a peak formation low happen or anything like that. So that, you know, that by automatically is going to, you know, prohibit you from taking a lot of trades. You know what I mean? on the flip side of that, though, when you do take those trades are going to be super accurate, you know, and you're going to should have a pretty high winning percentage because of it. But the flip side of it, you're not going to take a lot of trades, you know. So as long as you're okay with that, that's all that matters. And as long as you understand that that's what's going to happen, you know. So if you want to be bad and bougie and only trade, you know, certain things, that's perfectly fine. Absolutely fine. You know, it's whatever's going to make you feel more comfortable to where you're not freaking out over something. You know, so if that makes you feel very comfortable with your trading and stuff, and you feel confident in just trading those specific patterns or those setups or anything, by all means, just do it. Perfectly fine. You know, but just know that's not every day is not going to have a trade for you. Now, what that does, doing something like that though, it does allow you to actually open up to, let's say, more pairs, right? Because you're looking for something very specific. So in that aspect of it, what you might be able to do is, because you're looking for something very specific as far as the setup goes, let's say for, you know, that peak formation low or high and then a level 1 off of it, then you might be able to go ahead and actually start looking at a lot more pairs and just scanning through the pairs and seeing if you can identify peak formation low or high with level 1. You know, so that it does do, because now you're being very stupid specific, or very stupid specific about what setup you want, and that's perfectly fine. And then you could scan other a lot more you know, pairs because of it. You know, so if you're trading, let's say, the US session, then, you know, you're going to be scanning, let's say, Euro USD, Pound USD, USD JPY, USD CAD. You'll be scanning like NZD USD or AUD USD. You know, pretty much anything that has a USD in it, you'll probably be scanning a lot during that US session, you know, to see if you can find that specific setup that you want. And so if it's there, great. If it's not there, okay, well then obviously you won't you know, you won't be taking a trade, you know. But it does definitely open you up to more possibilities with different pairs. Yeah, exactly. I mean, you could wait for that for the moving of the stop loss once you see that retracement that happens. You know what I mean? So like, let's say, so you see how this one was a type 3 here going down, and then it had the pullback, right? Let's say you can move your stop loss once this pullback is over. You know what I mean? You can move the stop loss from up here to like down here once the actual pullback is over. So maybe that could be like a rule that you set yourself of like, hey, I'm going to keep the stop loss at the original stop loss location until I get a pullback first. And then once I get the pullback that happens, then I can go ahead and move my stop loss. Yeah, Jimmy, the more that you backtest, the more that you're going to, that's the whole point of backtesting. The whole point of backtesting, Jamie, is for you to see and it's really more of the psychology thing, because what you're doing when you're backtesting is you're basically showing your brain that the patterns are there, number one. Number two, what happens is basically your brain is not going to stop you from taking a trade, because your brain's seen the pattern over and over and over again through backtesting, right? And you're not, basically, once you take the trade, your brain knows that there's going to be pullbacks that happen. It's not going to freak out over stuff. That's the whole point of backtesting, is to basically make your mind believe, so your mind can believe what it is that you're doing. by showing it example over example over example over example over example of the setups that happen all the time over and over and over and over again. That was the whole point of the flashcards on weeks 1, 2, and 3. Was so you can see for yourself that the patterns are there over and over and over and over and over again. So it's not a question about the patterns, whether they're there or not. You know what I mean? The patterns are there. Struggling with EMAs for direction. Okay. So those levels helped a lot informing my directional bias. Yep. Yep, exactly. Exactly. So I mean, think about, you know, when you come into the charts for that day. So like whenever I come into the charts for that day, I'm thinking to myself, where are the EMAs at? Okay, so let's go back to a pair just so I can freaking show you what I'm talking about. Oh, let's go back to like 14th or something. All right, so let's do this. Let's play this week out real quick so we can get into a new week. Let this week play out real quick. All right, so as a pair comes into the US or to the London session, all right, so here's, all right, there. So think about what's happening here. So this is Sunday, Monday, right? So Sunday, Monday, think about what is happening. So what is actually happening here from the previous week? Since it's Sunday, Monday, that's the only really thing that you essentially have to go off of, right, is the previous week when it's Sunday, Monday. You don't have anything else to go off of because of that. You know what I mean? So you only have the previous week on a Sunday, Monday to go off of. So what happened the previous week? What cycle is this on the previous week? Trending, right? All right, so we have a trending cycle the previous week. Now, coming into Sunday, Monday of the next week, ideally, if you look at just by the EMAs alone, right? So just by the EMAs alone, the EMAs are pretty much all above you, right? So what's the likelihood that you're going to get, you know, like let's say price to go through all those EMAs, you know, today? You know what I mean? It's not very likely, right? So you have the TDI that's already down here at the very bottom. That's one thing, right? So price on the TDI is all the way at the bottom here. So the way price is moving right now, okay, I'm really looking at one or two things. Either this is going to come up and bounce, and basically it creates a type 3 because it's bouncing off of the 800 or the 50 EMA, right? Or because the TDI is down here, this TDI is going to do this and create a W here, and this may get a W to go back up to one of these EMAs. So it's one of those two things that essentially is possible, right? So the next thing is just waiting out to see what price does, right? If this is going to be a type 3, well, it'll go up here and it'll freaking bounce back and it'll get rejected, right? If it doesn't go up there, it'll make a W here, which is the only other thing that I would want it to do, and then we could trade that. You know what I mean? That's really the only two things that we could trade based off of what the chart looks like right now. You know? So think about it like this. Every day, there's going to be either three things that happen. So three things that are either going to, one of three things is going to happen. Either you're right, and it goes, let's say, in a type 3, you're wrong and it just completely does something out of character, right? Or it's literally just going to move sideways and it just doesn't do anything. Do you know what I mean? You're either going to be right by the trade, you're going to be completely wrong, or it's just price is just literally going to move sideways and do nothing. How do I make the day appear? What do you mean by how do I make the day appear, Jelen? All right, so Monday, like this, the labels and stuff, that's part of the indicator. It's part of the indicator. All right, so we play this out. All right, so obviously we didn't get a type 3, right? Price did not go up at all. It came right back down to create what? A second leg. So now look at the TDI. It's got its first leg here. Second leg is already above the blue line here, the outside of the outer band here, and it's already crossed the red, right, the signal line or whatnots. And the green is already as well passed above whatchamacallit, the yellow line, right, the market sentiment, right? So does that look like a W or a type 1 setup? Yes or no? Okay, so what would you need to enter this trade? What would you need to enter the trade? Or let's say what's stopping you from entering the trade? Let's say that candle is over with, right? So that candle closed above the 13 EMA. So if you're an aggressive trader, would that be your entry? Or are you waiting for the crossover? Or are you waiting for, let's say, a pullback on the next candle as part of your entry? Because, I mean, you have the TDI, right? That's in your favor. So that's a good confirmation. That's one. You're in the right timing, right? That's two, or you're in the box. You have a type 1 pattern, which is good, right? So it's like you have to think about what else do I need to enter the trade? And this is like when, you know, if you're the type that's getting hung up on, you know, not entering the trade or hesitating, like how many things do you need to take a trade? Start like literally thinking about like all the stuff that you would need to enter a trade. You know, like how much stuff do you need? So for me, right, I would want to get a pullback because this candle's way too big. Right. So I would want a pullback. If I don't get a pullback, then I mean it's probably going to be way too far. So it's about 23 pips. You know? Yeah, exactly, Larry. I mean, if it's Monday, if you're not trading on Monday, then you're not trading on Monday. But so this particular candle is way too big, right? So ideally, you want to pull back at least half of that candle and get like maybe 8 pips or so back. Because if you get 8 pips or so back, now you're talking about, you know, it being like a 13 pip stop loss. You know what I mean? If you can get that candle back, or at least I should say half of that candle back. So half of the candle be looking something like that as far as the entry goes. You know, so somewhere in the middle of that candle, and then that would basically make your stop loss here. Should make it about like 15 pips or so. And then the next question becomes, where do you take it to? Well, you can't take it to the middle because that wouldn't make any sense. That's only a one-to-one risk, right? So what are your other options? Your other options would be this yellow line here, which is, I think, the previous day's low, or yeah, the previous day's low here, or the high of the Asian range, which is about 32 pips, or longer term be obviously the 200. You get what I'm saying? So one of these things from here, from this yellow line, from this one to this one or this one, right? Because going up to here doesn't make any sense. You know? So one of those two. So just be, let's just put it up to this first yellow line. It's about 30 pips anyways. Okay. If you go up to the Asian, you're like literally we're talking about a pip or so close from 2 pips away from like a 2-to-1 restore ratio. So let's make it something that's easy for us to hit. Okay. Where it just makes sense. So the next candle we need is a pullback, or else this doesn't even matter. So if we get a pullback on the next candle or the next couple candles, then that's great. But if we don't, and it's just, let's say it pops up and keeps going, obviously, then that's going to blow the whole thing wide open. So there's your pullback on the candle. And let's see, does it go? There's a pull. Remember that pullback that we talked about? There's that pullback, that big candle there. Do you see that candle there? There's your pullback there. That always, if you move your stop loss up to break even, which would have been like somewhere around here, right? With the spread at the end of that candle. So with the spread here, the end of that candle here, it could have probably taken you out. You know what I mean? Could have probably taken you out there. So really, can we get over this line here? Because just hitting the line isn't really take profit, because you have the bid and ask. And so both lines have to be over the, the line here for it to actually take out your profits there. Okay, so that would have taken you out right there, out of your take profit. All right, so Tuesday, Angela. So far, what do we have? We have just basically went down, come back up. We basically we ended where we started, right? Literally, that's all we did. And like this, came back, boom. Now we're going into Tuesday. So on Tuesday, and it looks like this, right? Going into the London session, it looks like this. So far, we basically have just straight movements sideways. Where's that line at? Here's you're basically trading right now between that, right? You're basically creating so far nothing but a level, it looks like. Now you see how the EMAs are going straight through price. Right, so if you're in accumulation, though, remember that if you're in accumulation, that you're ideally taking trades basically from down here or from up here. You know what I mean? So until it basically breaks that behavior, the ideal places in an accumulation cycle to take trades at obviously would be the bottom to go back up or the top to go back down, So until it breaks this kind of, accumulation stuff, you really can't use, like, let's say a directional bias, because it's basically going to trade like this until it breaks. So let's say if it were to break like this, then the next day you would have some kind of a bias. You know what I mean? Or if it were to break short, then you'd obviously have a bias. But because price is accumulation, the only bias that you have is that if it's down here, I'm likely looking to buy if the pattern is there. Or if I'm up here, I'm likely looking to sell if the pattern is there. Does that make sense? No? Yes, no? What is it that you don't understand? So right now, the only thing that you have is accumulation. Because all you did on Sunday, Monday is you went from here to here, did nothing but move sideways. so far in the Asian range, you literally went down to the bottom of that low. I mean, I think that if you get a, let's say a type 3 here like this, it would make absolute sense to take a sell. You know what I mean? It would absolutely make sense to take a sell because you have potentially a peak formation up here and then you're building out a level. The only problem that you have is really you don't know how long this is going to go for. It could go for 2 days. It can go for a week. You don't know, right? So you're not wrong in thinking that, you know, let's say we might have peak formation high up there and stuff. So if you look, you know, I mean, that's nothing not reasonable to think. You know what I mean? So it's not unreasonable for you to think that. I mean, obviously it's a huge peak up here. So it's not like it doesn't exist. It's there. You know what I mean? It's obviously there. So remember that Tuesday could mean that a directional move in one direction the whole day. Peak, go to cycles and pattern, yeah. All right, so let's see if there's anything that gets here. Does that look like a type 2 to anybody? Or is that too early or what? Anybody notice anything about this? Does that, I don't know if you have a mic, Troy or Kevon, does this look familiar at all? The fact that you have potentially, let's just say like peak formation high here, and then level 1 here, and then it's going up, and you're, I don't know, it's 60 pips from the high. The cup pattern? No, it's not the cup pattern.
I have a little brain freeze here.
Could be a money trade.
Money trade. There you go.
Money trade.
Possible.
There you go.
Okay.
You'll find out in the advanced course, Angela. Yeah. So there's your close below. Let's see, your 30 pips. Let's just say 800. It's about a 1.5, almost a 1.5 to 1 risk to reward ratio. It's like slow and steady in one direction. So it's for basically 4, 5, 6, 7. Think about how much time is from here all the way to here. To this is what, 5 o'clock. So 8 to 5 is how many hours? 9, right? 9, 8 hours. Slow and steady, slow and steady, slow and steady. It's 47. From the top to the bottom, it's probably like 70. But from the entry, it's like 47. All right, so next day, here, now that you have 2 days of data, I think that you should be able to start to have some kind of bias. You know, when you start looking into Wednesday. Because, I mean, what is it that you have so far? You didn't have really 1 day full continuation of rise, right? You basically had rise in London and then reversal in New York, all the way back down. And it's not like it actually went back down, you know, through, let's say, the bottom here. It went literally to the top of that high and then bounced off of that. Do you get what I'm saying? So because it did that behavior, you're outside of that structure when you started the week of an accumulation, right? So now that you're outside of that, now you have the EMAs underneath you. Do you get what I'm saying? So now that you have the EMAs underneath you, I think now you can start to use them to basically help you with a trend direction. Because you're no longer using the barrier of, let's say, the the high of Sunday, Monday, and the low of Sunday, Monday. You're past that now because you're basically trading above that. So you're no longer in that accumulation bubble. Do you get what I'm saying? So now the possibilities are going to be basically to have bounces. What I would like to see is bounces off of these EMAs. I don't care which one, but just to bounce off of the EMAs. You get what I'm saying? So I'm looking for literally bounces off of the EMAs is what I'm looking for, because all of these EMAs are right here. So you could have basically a bounce off of the 50, a bounce off of the 200. If it bounces off the 50, it would be like a type 3. If it bounces off the 200, basically it'd be like a type 2. You know, even if it bounces off the 800 here, it'd basically be like a type 2 also. So the ideal kind of trading or the ideal kind of setups that I would want are either type 3s or type 2s that I would want to trade. You see the pins to the 200 EMA, and then now you can start to see this TDI here is bouncing off of the 50. See that? Like that would be your second leg right there almost. Watch on this next candle to see if the next candle helps this TDI basically make this little jump up here like that to create basically like a W. That's your signal line right there that just crossed. You would have a first leg here, second leg here, and then it goes off. It's a signal line, is what that is. No, it's basically literally the signal. So the green is the actual movement of price. The yellow is the overall sentiment. So the overall sentiment right now, being just the yellow line by itself, since we're above the 50, is a buy. The green or the red line, the only thing it's there for is to help you signal. So like think of it like, when you have a 5 and 13 crossover, it's a signal, right? It's the same thing.
Excuse me, I got a question about this.
Yes.
When you on the backtesting sheet, so for the sentiment part for the market baseline, okay, and so I see it's written up, down, and level. So what do you mean by level? So on the journal.
Is it going
so
like
on the journal?
Or is it going like that?
Okay. So after that, there's another box. So if I understand, the market, if it's below the 50, that means it's downtrend, right?
It's not that it's a downtrend. It just means that the market sentiment is more of a seller's sentiment.
Okay.
So when this yellow line crosses the 50, it becomes more of a buyer's sentiment.
Okay. But sometimes, so what happens when the market baseline, it's grazing the 50, and then the green line just cross below. So is it still a bullish sentiment or a bearish sentiment when the market baseline really flatten the 50, grazing the 50 line?
Well, if this yellow line is here, so if this yellow line is doing this, right? And you have, let's say, the green line the green line should be basically bouncing off like this,
Okay.
right? And so ideally, when you have that kind of scenario, you'll have the blue lines, which are the Bollinger Bands that are basically like this. You're going to have basically a squeeze happen. So typically
Okay.
when you see that kind of behavior on the chart, you're basically seeing literally like all of the EMAs all bunched up together and going straight through price. So at some point, this is basically, so think of this like a squeeze, and then it's automatically going to break.
Okay, thanks.
You get what I'm saying?
Yeah, thanks.
But ideally, the only thing you want to use really out of the TDI is to help you confirm what you're seeing. So this type 2 pattern here, let's say, can you confirm it here? And if you can, great. That's another form of confirmation that you have. Is it always going to be there to help you confirm it? No. There's going to be plenty of times where this thing is like freaking out in Jupiter or something, and freaking this is doing a perfectly good type 3 or whatever. You know what I mean? So this only comes in handy for you to help confirm things. You're not basing any sole trades off of the TDI itself. You're literally just using it to confirm. That's it. So ideally here, you want to get some kind of a pullback. You know, if you can get half the candle back and like have an entry like here, you know, at least half of the candle back, that'd be great. There'd be your half a candle right there. Either this candle or the next candle, whichever one. And so what are the obvious points? If you're going to go long on this, what are the obvious points of take profit that would make sense? If you go here to the high is only 21 pips. If you go to the high of the previous day, yeah, you're right. It's about, you know, whatever, 38 pips or so. And then obviously the only other thing you could do is go all the way up to here, which I don't think it would go up that high just automatically like that. But that would be, you know, obviously the next line essentially that you can do, which is the previous week's high all the way up here. Does that make sense? So those would be like your take profits essentially, because obviously you don't have the EMAs in your favor to use. So it's either from here to here or from here to all the way up here. And so your original target could be just as simple as that. And by the graces of God, if it decides to go up higher, then you turn basically those singles, right, into like home runs, you know, by doing that. And it may happen, I don't know, once a month or something. I don't know when it happens, but the only thing that you're worried about is hitting the singles, which are the 25, 30 pips over and over and over again. Sometimes you'll get, you know, the 45s, sometimes you'll get 50, and sometimes you get the 100 and so, whatever it is. What are the coincidences that it would go all the way up and just stop at the previous week's high? See what I mean? Like, why not go up here or here? Why go specifically there? You know what I mean? So look what happens now. It went all the way up there on Wednesday. And then on Thursday, where is it going? You see how like fast it's like going back down again? Like it just did. How many pips was that? A good 50 pip drop in like a matter of 3 hours. Even more than that. Look at that. I retraced almost the whole thing. All right, so it's Thursday now. So far, what does this look like? I'm saying as far as the weekly, Larry. The weekly. when you look at the whole week, Monday, Tuesday, Wednesday, Thursday, what does it look like? Right, it looks like a trend, right? It looks like a trend. That's what it looks like, literally. So then the question is, in order for it to be a trend, we'd have to make a higher low, essentially, right? So I'm going to say this is the higher high, and then we got to ask ourselves, is this right here the higher low? Or is it basically going to, let's say, go down further to like, I don't know, let's say the 800 or something first. You know what I mean? To create the higher low before going up more. Does that make sense? So these things you got to ask yourself. Is that little turnaround that did right here, is this the higher low, or is it a possibility that it can go down further and then go back up? All right. So does anybody notice what's happening? Does anybody notice what's happening?
Looks like it's trapping volume, but it looks like it's protecting that previous Asian's low. Almost looks like it does want to go up higher because it didn't break the low, but it looks like it's just trapping volume to me before the breakout.
Yeah, it's literally right. It's squeezing, right?
Yep.
It's literally squeezing. It's going to have a breakout somewhere, either up here or down, but it's going to have a breakout because it's squeezing. It's like squeezing the last little juices out of that as much as it can. So if it didn't do it during London, guess what? It's going to happen during the U.S. session. So with these squeezes, you're going to have a big false move basically happen. And then there's going to be the real move that happens. That's probably it right there. See that big rejection, that wick of that candle right there? No, it came right back up. Wow. Yeah.
So I got a last question on this, please.
Yeah.
So you know, in the London session, when the 13 and the 50, when the 5 and the 13 cross, the second one is on the London box. So if I watch the TDI, I see like a M formation will form. So me, honestly, I will took a sell on the second 5 and 13 cross. So will it be a good trade? So if I don't see the rest of what happened on the chart.
I mean, yeah, the trade would be good, obviously, but I think that you would have maybe one of two things would have happened. I think you would have gotten stopped out because of possibly, this, because of this wick right here would have possibly stopped you out, unless you put your stop loss all the way up here. So I think that wick definitely would have stopped you out, or you would have had a 6 candle rule that would have taken you out.
Okay, thanks.
But yeah, I mean, you weren't wrong in the direction of where it was going. You know what I mean? There's your whole week, right? So if you notice, so there's like almost a, here, let me play this Asian range out. Okay, never mind. I was going to say if price continued to do like down here, I would say it's like another squeeze here between the 800 and the 50 or something, but all right, so that didn't happen. All right, so last day, which is Friday, so God knows what will happen on Friday here. Level making or accumulation is what he's saying. Look at that. So this right here, that candle there is news. That's 4:30 news is what that candle is. So because of that spike, you kind of already know what's going to happen. Probably going to drop. So what do you think is happening right here? This last hour and a half of London. Look, I mean, literally, look what it's doing. Sideways to close out, or it's really, collecting, right? Collecting. It's opening of the U.S. session there. Do you see that? So what do you think that's doing on the bigger picture? If you go up to a 1 hour time frame. So think about it, right? This is the bigger picture, right? So this is where we were here, right? This entire week here. Well, look at the bigger picture. What's that? And so what's this? Yeah, the bigger picture is so. Yeah. The bigger picture is so. Was this at all helpful? All right, so what do you guys think are going to happen this upcoming week here on these pairs? Euro JPY. What do you guys think is going to happen? Yeah. Looking at going higher. I think what would be nice to see, I think the overall, the bigger picture, I think it is going to go higher. But I think that what I'd like to see is a move possibly down back to this area here. So like I would like to see maybe like, let's say a market maker cycle this week. So that way it can drop down here and then have a midweek reversal to go back up. What's confusing about price getting to the line?
Mark, like whenever the price gets on like those lines,
Okay.
sometimes like it breaks that, right? And sometimes it doesn't, right? And sometimes I use that to project like the week, where the week is going to end, right? And the price literally just reverses like from the middle of the range that was between the support and resistance, right? So I just want to see like how do you like, what do you do, like how do you use it for your bias, like in the, maybe I'm marking the lines wrong, like I don't know.
I mean, think about why am I marking these lines? These are just major areas on a weekly chart, right? So in order for this to go from here to here, is it just going to go straight up in 4 candles? It's not going to go up like that, right?
Right, yeah.
Right. So before it can go, think about this. This is how big is this? This is probably from this line to the next line is about 339 pips. Okay. So it's not just going to go 300 something pips in one direction. Right. It's going to have pullbacks go up. It's going to have pullbacks go up. This could take, I don't know, a week, freaking 4 weeks, 5 weeks to do. I have no idea. Right. You just know that the bigger picture, because there's really nothing here. There's nothing but open space here. You know, that over time in the bigger picture, it should go higher. You know what I mean?
Okay. I see now. Yeah.
So it's just about, okay, waiting for this to go back down, right? So you can buy it again. Go down again, so you can buy it again. You know what I mean?
Yeah.
That's all you're really wanting to do, is at least you have a bias of like in the weekly charts, you know, it's broken a major structure here. It literally flew by it like if it wasn't even there.
Mm-hmm.
You know, so now you're going to have the 50 here. You're going to have the 200 here doing this. And so you would want this. I would want this to go back down because that would give me a really good entry on a buy to go back up. You know what I mean?
Yeah.
So just seeing this on a weekly, let's say, and now you go back to a 15-minute chart. Well, like what kind of a cycle, I guess, would you like to have in order to make that kind of move happen?
Yeah, now I see why you said market maker. Yeah.
Like the only cycle that I would know that would kind of do that would be like a market maker cycle, where it would drop down the first 2 days or maybe 1 day, and then, you know, go back up and then reverse. You know, so let's say, you know, Sunday, Monday it has sideways movement, and then Tuesday it has one way going down, and then Wednesday reverses. You know what I mean? Something like that.
Right. Yeah.
So that's why I would say I would want a market maker cycle to happen here, so that would give you an opportunity for a midweek reversal to happen down here, and that would be like your entry that you can use.
Oh, I see. Yeah. Okay. So that's why you don't remove the lines. You still keep them because the pullback can
I keep
happen.
them as a reminder of where the weekly structure is.
Okay.
That's why I have them there. It's just a reminder that I know, okay, I'm in the weekly, on the weekly chart, you know, that's where I am on the weekly chart.
Okay. And you know what I was doing? I was like literally putting lines below every single candle and above every single candle, like literally.
It's not every single candle. It's just the, you know, these are like the obvious like areas for me that I look at that I would look at on a chart. You know what I mean? So like if we go back, let's say if we erase this, and let's say we go back, I don't know, we go back here to this area, right? And this is what we look at now, or this is what we have, I guess. You know, my lines would basically be like, let's say one here. I'd put probably like one down here to cover that area, and then another one here. You know what I mean?
Okay. Yeah.
Is how I would do it.
I see. Okay.
Do you know what I mean? These are the obvious
yeah.
areas. That's all it is.
Because
It's obvious.
I was placing like above here, like over here as well.
Yeah.
Like literally everywhere.
Yeah, I mean.
Yeah, now it's
I just
clear.
put it under the most, you know, under the most important parts. So
when do you? Another question, right? So like now, the price closed below, right? Would you still keep that line, or you will?
I still keep the line.
Yeah.
Well, I mean, the lines itself, you can actually adjust them as you go along. Do you know what I mean?
Okay.
So obviously, you know, when you first start out, you're just drawing them to have some kind of point of reference. As price plays out, you'll start to see, okay, what lines are actually more relevant or more important than others. So now that you've played this out, right, this line clearly is important. This line here clearly not as important. You know what I mean?
Yeah.
So you just make adjustments. So okay, well, if you're going to move that line, if it's just going to go straight through it, like it's not even there, like it didn't create any kind of structure there, right? Then you just move it, and you can move it up here now. You can use that as structure, and you just keep going with it. Because clearly that line, you see, it's structure there. Because price keeps going to it and then reversing from it.
Okay.
You know?
So you just want to like EMAs these lines, right? We just want to see reaction, like price reacting to it. That's it.
Well, price is going to react. Yeah, price is going to react. You're going to have price reacting at the EMAs regardless. You know, price is going to react at the EMAs. That's just something that happens. That's why I liked using EMAs, because I know price reacts at it. It's just a rolling, you know, a rolling line of support or resistance, depending if it's above or below price. You know, they're always going to act on there.
Okay. Thank you, Mark.
But it's just going to take practice, man, like with anything. You might add another line here, let's say, at the bottom here. As price moves along, you make adjustments. Just like as every day you get more data, you just make adjustments to the cycle.
So, Mark, like now, right, on this one here, they took all the liquidity would you still consider this as a relevant line because you're thinking they make a come back and make a pullback? That's why the
If they
line
do
is
that, yes,
relevant.
that line would stay there.
Okay, because of that, pullback can happen,
Right.
and they closed above the 200 as well.
But really, this line is actually up here now. Remember that?
Okay.
This line from here, once it blew here and it went past up, I just move it up here now. Because that's where the more relevant space is.
Mm-hmm.
Remember, this is a weekly chart, so this is back in like June.
Okay, yeah. Yeah.
This isn't like last week or something. This is like back in 2019.
Okay, yeah.
So the more relevant the price action that's most relevant is more important.
Okay, I see. Makes sense, yeah.
On what, Dwayne?
EJ, please. Just check the levels for us, please, on the 1 hour. I've got 3. I got peak formation high actually. And with the bias of it going up, I think it might reset and start going up. So peak low is 119.301.
All right. So the first question would be from here. Let me change this shit to white. From here to here, do you have 3 levels?
I am not. I wasn't doing it from there. I wasn't doing it from that side.
Right. You're doing here, right?
Yeah, I'm starting from there to where we are now.
So let me ask you again. From here.
All right. Okay.
From here to here, are there 3 levels?
Okay. Let me just quickly have a look at it.
And then from here to here, are there 3 levels?
1, 2. Yeah. So from the bottom where you marked that, from that 114 area, yes, there's 3 levels up. There's 3 levels up to.
Okay.
To the top.
So there's 3 levels here, and then from here, are there 3 levels here? So from
yes, there is.
So from this to this.
Yes. So
okay.
1.
So
2,
if there's 3
3.
levels,
yeah,
from here to here, then how many levels from this low to where we are now?
We've got 1, 2, 3. We got peak formation high up there.
You're at peak formation high here. All right. So essentially, you're looking for basically what? Level 1.
Yeah.
Yes. So you're basically
looking.
waiting for. This is what you're saying is your peak, and then you're waiting for this to be a level 1.
Yeah. But I think based off what you said, that it might move up, so it might just be a reset and go higher. Take out the high of that week.
Correct. Yeah. So I mean, if it breaks below this weekly level here, then it'd be like, let's say 1, 2, and 3, right? If it stays here and then breaks up like it looks like on the weekly, then this would be the reset. You know what I mean?
Yeah.
And then this would be peak formation low, and then you start to count over again.
Yeah.
Does that make sense?
Yeah, it does.
Okay.
I just wanted to make sure that the levels were there, just because making sure that I'm seeing them right.
So show me your levels from here to here. Where are your levels? You can annotate on the screen.
Okay, 1 second. I don't know how to do it properly. Hold on 1 second. There's a level here somewhere. I don't know how to get the boxes right. So across here there's a level. I need to get it right because then it'll come out better. My drawing skills are bad. Okay, so that's one level.
Okay.
Oh God, I'm bad. Okay, that's another level there.
Okay.
That's another level there.
Okay.
And that's another level up here. The whole of that thing here. I just I can't get the box right. I don't know how to do it properly.
I gotcha. So
Yeah.
does
So
anybody else have a different layout for the levels besides what he just drew? Or does everybody agree with that?
I got a different one.
All right. So draw them out in a different color.
Okay. 2, 3. That's a reset.
All right. So let's start with the white ones here, right? So you had with the white ones, you had what is this? 1, 2, 3, and then reset 1, 2, 3, right?
Yeah.
Okay. So you're just counting them on like on a micro level, basically, right?
Mm-hmm. Right, yeah.
I mean, yeah, that's what you're doing. Yeah, micro level. Okay. So do you see how two different people have two different types of levels, but they both get basically to the same end?
yep.
Do you see what I mean?
Yeah.
So you guys still got to basically the same thing. You just got to peak formation high here, and then you just got to level 3 here. And then the yellow big boxes are Angela. So Angela, you had, just to make sure, this whole thing here was level 1 for you. Is that correct? Gotcha. And then this 1, 2, and 3. Is that right? Okay, 1, 2, 3, and then peak formation high. Yeah. So you got, 3 different people, right? Seeing the levels in 3 different ways, but they still get to the same, peak formation at the top. You see what I mean? Still come up to the same thing at the end of the day. Just read them 3 different ways. Micro. This was interesting because I would consider like Arpan did it in micro, Angela did it in macro, and then you actually, Dwayne, did it in like a mini, type of way. So all 3 different facets, but you still got to the same outcome.
Yeah.
So at the end of the day, that's all that matters. All right.
Yeah.
So
check Angela. She wants to know who's right.
you all were right. That's the point. You were all right because you all had the same outcome. You know what I mean? It just depends on how you're reading them, whether you're looking at them from a really macro view of a big overall big view. Are you in the trenches looking at them on a micro, aspect of like a 15-minute chart? So that's why, that's why you get 3 different views. But the important thing is that you get to the same outcome at the end. That's it. So good stuff. All right. So that's it for this one, guys. You guys have a good one. You guys have a good, enjoy the rest of your day. And